Hey everybody, Lance from ThetaTraders.com here. In this video I'm going to go over the weekly returns and how I actually calculate it. I'm going to calculate it for you guys live on this video. So what a main goal is to track the SPY gain and loss each week, and these are cumulative. So I'm going to take the first week and take the second week and add them together. We'll do the third week together here. Also going to be looking at my net liquidating gain and loss as a percentage. The way to do that is I take my initial net liquidating, take my final net liquidating, and essentially subtract it out and divide by the original one. For the realized percent gains and loss, we're going to look at the closed trades for the week and then divide that by the last week's net liquidating value. All right, so from my TC brokerage, looking at my net lick, and it's 54,822 at close. For SPY gain loss, you can look at google.com, just type in SPY, click on the last 5 days. It went up 2.21%. So it was up 2% from when I started in December. We're going to do 2 plus the 2.2%. And we're at 4.2% since I was tracking these. You'll notice in the table here, I set it up where it updates the graph showing 1215 with this blue bar. We're at 4.2% in SPY since I've tracked it. For net liquidating, I'm going to take the difference of these, 54822 minus 53935 from last week's net lick. So it was a gain of 887 in the net lick. Divide it by the last week, 53935. And we went up 1.6% in our net lick. I'm going to take 1.6%, add it to the 2.4% I had from cumulative from last week, and we're at exactly 4% in our net lick. We'll see the red bar comes up. For the realized gains and losses, going to look at futures profit tab. So for week 3, I closed $95.5 in a naked put on the safeguard, closed $70 gain on a naked put on oil, made $23.25 in another safeguard naked. We did stop out on an MES strangle, so I lost $120 on that. And then I closed a covered strangle for $162.50. When you add all that up, you get $231.25. So I'm going to take the 231.25, divide it by the, under testing here, divide it by last week's net lick, 53935, and it went up 0.428%. So I'm going to do 0.42 plus the 3.9 I had from last week. And we're at 4.32% in our realized net gain and loss. That's our yellow bar, and you're going to see it pop up here. So you can see the trends in your data the last 3 weeks. I plan on doing this in 2024 and looking at beginning of the year. We'll start at 0%. Going to be tracking all these 3, seeing what the trends are. Whenever I add money to the net lick, so say I add $1,000 into the account, I'm just going to count that for the previous week's net lick and then still do the same calculations. Here's a blog post I wrote on it. I'm going to add in the images of what we just saw there. So I'm tracking my net earnings with gain and loss as a percent of my net lick and realized close trades, comparing them to what happened with SPY. So pretty much went over exactly how to find these changes. If you want to read exactly how I did that, you could look at the blog post. I'll leave it in the description down below. One of the goals is to see if these strategies will have a higher percent gain than SPY, and that's what most people track against. In bull markets, this week the SPY went up. I'm going to add this in now, 2.21%. Trades will likely be similar or slightly lower, as we just saw in the calculations. We made about 1.6% on the net lick gain, 0.4% on the realized gain. So pretty close to the SPY percent gain. I do have hedges, put debit spreads, and possible slower to can naked positions. So when the market goes up a bit, like 2% that it did, my account may or may not show that same return. So when SPY is very bullish, I might underperform slightly because of the hedges and slower theta decay compared to just increases in SPY. When SPY is slightly bullish, I think I'm going to outperform it. The theta decay is typically greater than a slightly up week. Let's say SPY goes up 0.5% or so. Most of the theta decay will be a little bit bigger than that. When SPY is neutral, I'm very likely going to outperform with that same reasoning. When SPY is slightly bearish, I think I outperform because realized profits will be closing out. Put debit spreads might possibly profit, so you might get a little extra returns there. And when it's very bullish, hard to say. Depends on how bullish or very bearish it is. I mean, because you could possibly stop out on some trades. But I do have a lot of hedges and I do have a lot of put debit spreads. So those might offset it and might be close to break even or slightly down for that week. I'm not concerned about the week to week. There's going to be some weeks where SPY will outperform, which is perfectly fine. But I want to see the long term trends and I want to be able to see if the strategies are working well. So if you follow along on my YouTube page, I'm going to be giving regular updates on how my returns are going compared to SPY moving forward. Also, I do have quite a bit of buy and holds in Roth IRAs as well, so I don't mind if SPY is doing really well and very bullish. Yep. So if you're interested in seeing all these trades that I do, my exact account size, exact how much positions, and how much I'm using for each position, get one-on-one from help from me and small group help, you can join at thetatraders.com. Have a good rest of the week, everybody, and I'll see you guys on the next video.